So let's compare high probability with low probability. High probability is going to enhance profitability. You've got to know when you're operating your trade model, what is the condition of the market for your trade model going to be? Low resistance, high resistance. So another way to say it, probability in a high probable environment to operate your trade model, or is it a low probable environment to operate? If you're going to operate your trade model, you want to have the highest probable outcome. I'm recording this after the close of the market, a few hours afterwards, and the main thing on the takeaway is we are on day 22 after the election. You've got a volatility drop 11 days after the high. You can see here the VIX is a measure of volatility, 18.79, and we go all the way down to the close on Friday, 12.77. This is a low probability condition. If you're going to operate your trade model in low volatility means low probability, and low probability means lower profitability. So I don't want to be operating aggressively with high leverage and a high frequency in these kinds of conditions. On top of that, it's end of year, it's holiday time. 31.84% drop in volatility. On day 11 high, after the election, we had this steep drop here, and this after the election. So we go here, we go down, we go back up. So I'm measuring from day 11 high to day 22 from the election impact on the VIX. And you can see we're at a deep discount. And so 15.77 is the line in the sand between premium and discount array. And you have to go back into July of the summer to break a lower amount of lows. It has gone lower. So if we get into the 11s, that could be all-time low for the year. But I'm just saying here, this too shall pass, but we need to read the environment. Traders need volatility. It's like oxygen to breathe. And if you've got low volatility, it's going to be very tough. And what did we have Friday? We had another 5 times this week, all-time high. Monday, Tuesday, Wednesday, Thursday, every day, all-time high. Friday, all-time high. It's not by a lot, but each day, there's no two-way price action. So I just want to make that point on how people have lost track with complacency on how steep this VIX drop has been. In marking off 11-day cycles, I think that's very important. The power of 11 is one of those numerology numbers. It's a power number. And here we are on day 22. That's 11 twos. And we are right down here at the low. So 31.84%. Higher time frame. So we've got on the left weekly, right, daily. And so you can see on the left weekly, 3 weeks in a row, successive all-time highs. This dashed line above, all-time high, 6179.75. Green candle dragged the blue 3 EMA average. It dragged it up. It's not like it went down with meaningful two-way price action. It did not do that. The low for the week comes in at 6103.25, okay? So we'll see where we open up and where price is on the new week coming up and where the 3 EMAs is at. If there is a big gap, then again, it'd really have to break out to drag it up even more. But let's go to the right here because I'm real interested in this Bollinger Band on the red here. So the red is upper Bollinger Band. And what is the Friday close? The wick got to that high of 6179.75, but it did not touch the red. The previous day it did. So it faked everybody out saying, oh, we hit it. And we had a downsloping upper Bollinger daily. So maybe it'll go low. It did not. This Friday non-farm payroll, this green candle, what it did was it stayed, if you look at these three green candles, the biggest one was Wednesday. That was where we had multiple news events. We had FOMC, and then Thursday, Friday, these candle bodies were inside basically of that Wednesday. So no meaningful price action changed since Wednesday, except we did with premium candle wicks here is what happened. And those went for successive highs. So I think a little bit of games are being played here by those that have all the money and power to move this market, a little bit of manipulation because it's the bodies that tell the story. The candle wicks, I more or less disregard. That's what at least my mentor taught. So again, let's look at this blue line. That is the 3 EMA that came in at 6158.94. And again, upper Bollinger Band in red, 6184.5 and change. And what am I looking for? I'm looking for any kind of mean reversion. My line in the sand would be 6128.75. I'm not saying we're going there next week, but I'm just saying sure would be nice if we broke the lows of Wednesday. And so we'd still be in the body of Tuesday. And so that's a target that I have for next week. Part of the coaching process for clients is reviewing the trade journal that they do. And I think video is actually more comprehensive and better than just only doing written journal. And the reason is you can record the feeling, the thought, the emotion, you can see it, you can hear it, you can sense it. And even if you're just talking over a chart screen, it's very helpful. And the next part of this video, this basically helps me analyze how I'm doing chart analysis for the week, early in the week. Am I reading price correctly? What are the status of my reads? What's my overriding thoughts, feelings, and looking into that? Because that's, if you can see that you're going to be a good analyst and you're improving on being a chart analyst first and refining that, perfecting that, getting good at that, that's far more important than putting your money at risk and going into a trade when you're not even good at being an analyst first and reading price action. So that's what this next portion is about. This starts around London Tuesday, goes on to Wednesday, London, and I'm looking at the charts. I'm talking over them. I'm reading price action. And when I go over that, it really helps me feel a lot better about the week. At least I would give myself a B, maybe a B plus on my chart analysis for the time that I did, which was again Tuesday and Wednesday with a little bit of review on Monday. I hope this helps. Here we are. We're in London. You see 15-minute candles here. Previous day, we had high resistance liquidity. It got to where it was going, but a lot of overlapping candles on this 15-minute you can see here. And we did get an all-time high, and you can see that all-time high is 6137. Now, we're on the March futures S&P 500 contract, not the December. 6137 all-time high for Monday. Notice here on this bar, we have a big green bar coming back to the settlement price. We settled Monday 6134, so we're lingering here. Price action is having a little siesta at the all-time high. And then end dog here is this orange tan rectangle area, and that sits at 6128 by 6130. So two handles. Below that, we have the week's first present fair value gap on the 1 minute. I'll carry that through for the whole week. Even if we're going to have two-way action, this is a consolidation pattern. Currently, as I shoot this video, it's almost 4 a.m. Eastern Standard, and way down below here, we've got that new week open gap here. Over 12 hours later, past the close of regular trading hours, RTH, we've got here where we went today, and we mentioned 12 hours ago, this new week open gap, and once you know it, that was the low. We just barely came to it, not quite going through it. But remember, that's a 115.75 by 61.15. Okay. So that was the low of the day. And when did it happen? It happened in the AM. And what did we do after the AM? After 11:30, we had this giant black bar here. Let me blow this up. So big order block down, and we had high resistance to come all the way back up over lunch. It was just one candle at a time. These are 15-minute candles. So what was the next significant area of premium or discount? Well, it was December 3rd, first present fair value gap on the 1 minute. So I always mark that off. It's like a sandwich in the middle of what was it on the bread. The top bread was December 3rd, RTH open. So that was Tuesday's open of regular trading hours in New York. And below it was December 2nd. This is all suspect to me because, number one, it's very consolidated. We talked about price being held here, and it's very small range. So this is by any means not a large range day. You can see right at the close here on this candle, the high, we did break the buy side liquidity. And so let's just say 38 to 61.15. That's big deal here. 20 handles, give or take. That's nothing. So this is the second day of consolidation, and I'm just measuring out here for Wednesday because one thing about trading non-farm payroll week, if you're not sure about positioning where you want to be and having some dry powder for the Friday, you better be in a good position. So right now, for me, a good position is if I'm going to be short, I certainly don't want to be short at new week open gap below. I don't want to be buying long at the buy side liquidity. So sell side liquidity, it's simple. That's the new week open gap below and above buy side liquidity. So those are the levels. I've got a light gray rectangle right here. And what that is showing us is this is the Tuesday PM open range. So 30 minutes. This is the high and the low and the consequent encroachment. So everything is just stacked within this very small range. And we've got a settlement here of December 3rd. I could see them having this thing totally consolidated. And then on Friday, they just jam job it up for new highs. And I definitely don't want to be going long where we're at on the higher time frame. And I don't want to be shorting and having to think about all weekend, why the heck did I get short with inventory? Now I've got to sit all weekend until the market opens. So I'm very cognizant of where we're at. And I'm pointing this out here because this is just very obvious on the buy side liquidity up here. So again, that's 35.25 by 61.37. So we've tagged it, what, 1, 2, 3, and now 4 times. And we just pierced it with a candle wick on this 15-minute close for Tuesday. All right, we're here Wednesday. This is December 4th, and we've completed London. You can see the consolidation we spoke of earlier was been broken. Let's go through the levels. So we talked about how we closed Tuesday on the open range in the afternoon, and that's way down here. And that's kind of say, let's 6129 down to the open, RTH open from Tuesday was 612675. So what I've got here on the settlement of the prior day for RTH regular trading hours is 6136. This is this black dotted line. So we're currently have an open range gap up And we've, in London, hit an all-time high again. So that's 3 all-time highs, 3 days of the week, currently 6147.75. And it does not look like we're done. We could definitely go higher. But I'm just saying right now, here's where we're at. We have 3 catalysts, 8:15 a.m., 10 a.m., and Powell speaks at all-time highs for the stock market in the afternoon at 1:40 p.m. Eastern Standard. So that's something to note. So again, here's the market on a 15-minute chart Wednesday. We're in Globex still. We haven't come to the first catalyst yet at 8:15, so I'm going to watch that carefully and then go over everything after the 10 a.m. And then, of course, again, we've got a catalyst, which will be big in the afternoon. So we'll see how this goes, but definitely at least the consolidation has been broken up to the upside. Let's go to a higher time frame chart. Higher time frame on the left is the weekly. So you can see that 3 EMA did close. We tagged it here with the discount candle wick. And so it's not that price went down to meet it, it's that it was dragged, price dragged that thing, and the line just chased that wick, the candle wick. So on the right is the daily. What's interesting to me on the daily is the close of the Bollinger Band. So you can see on, if I zoom out here, look at this chart here. You've got really small range days ending in November, one day that wasn't green, which was right before Thanksgiving holiday. And then what do we do on Friday? The previous week after the holiday, we have engulfing bullish candle that totally wipes out that black day. And we continue the march up. Note that blue line. That is the 3 EMA. This line down here is the middle Bollinger Band on a daily. And up here, the upper red, that's the upper Bollinger Band at 617870, and it sure looks to me like we are absolutely going to hit that this week. So that I'm just saying that's the momentum right now. There is absolutely no down, higher lows. Even this down close candle here, this order block, the low was higher than the previous day. And the bullish one on Friday, we did have, again, a higher low. Monday, higher low, and here we are Wednesday.